SP500 daily time frame. This is your bear market and this is your correction. And if we only focus on this last wave, then bottom was 50% retracement of this last bullish trend. The coronavirus recovery of market based on Fed QE monetary policy, and top of this last wave, which is current price, is still a downtrend because price is still making lower low with lower high, and it is ready to make new low. And next target will be 61% retracement level at 31.95. So that should be your risk level. And this bear market is based on Fed QT monetary policy because they want to control inflation. Right now market is testing a key resistance level and everyone is closely watching it. And this trend line you can see, this is fourth time retesting this level. So if this trend line breaks, then that can be a short term bullish sign for market, and bulls will immediately target for this nearest high at 43.25. But before that we need breakout of trend line. But before breakout it is clear bearish trend and target is new lower low. So if you want to sell, you can sell, but your SL should be outside this trend line and targeting last low and new lower low. But for next bullish entry as a trader, you should wait for clear breakout. Then after breakout, you will buy retest and targeting this high. But main thing is, this was your all-time high and this is bear market or bullish trend has been started, because you have to understand difference between QE monetary policy which start bullish trend and QT monetary policy which start a bearish trend. QT monetary policy is ending and not completely ended, because right now the trend was increasing rate high size from 25. Fed went up to 75 basis point rate hike, and in next FOMC meeting they will decrease rate hike size again to 50 basis point. Then next there will be 25 basis point. Then Fed will stop raising interest rate, which we call pause. Every time this happens, stock market goes up when Fed stop raising interest rate. So until Fed completely stop interest rate, so this new bullish trend has been started and everyone is waiting for Fed rate hike pause. So if this breakout, then it has fundamental reason, and after some backward retracement it can break this trend line on second attempt. What after Fed rate pause come most important thing, rate cut. So from pause to rate cut, market can be bullish short term and hit happen every time Fed do this thing. But when they start cutting interest rate, and that will be start with 25 basis point, market start crashing, and market top can come before rate cut start or after rate cut start, but it crash on every rate cut cycle. And time between last rate hike, which will be 25 basis point, to rate cut. And in the middle we have Fed rate pause. And all the time between this period stocks can stay up, and rate cut will not start this year in next FOMC, not even first quarter, but rate cut can start in fourth quarter next year 2023. And when this will happen, stock will crash and nothing can stop them from making new lower low. So there can be short term buying opportunity, but long term stocks are bearish. And if we talk about economic news, then this week we only have ISM PMI number, but entire focus is FOMC meeting, because Fed will do 50 basis point rate hike. That will be ending of QT monetary policy, because slowly they will completely stop hiking interest rate. And from last rate hike to first rate cut will be Fed pause. That is bullish for stocks market. And these are three stage: the last rate hike, then Fed rate pause, then rate cut. And when Fed start cutting interest rate, that is called pivot. So this process has three stage. Right now we are entering in first stage. So technically everyone is waiting how market will react this trend line. And if this trend line breaks after Fed FOMC meeting, because Fed had already changed his monetary policy tone last week, and now they are saying that there is a risk for more rate hike. So last speech was dovish from Fed, and next FOMC meeting, if they sound dovish again, then it will jump, trend line will break, and it will test this last high. So as a buying entry, you only take after breakout, not before that, because Fed will cut interest rate when recession start. So their policy work with different time frame, and stock will not stop, because first rate cut will start and it will end with QE monetary policy. And this is your bottom and top. When QE start, stocks only go up, because Fed has said they will pause interest rate, but it is their choice how long they will pause. And it can be 3 months, 6 months, but it is their choice. So final stock market crash when there is huge panic, when you say sell off in every asset class, that will start on rate cut. And right now we are slowly going to last rate hike stage. So that is why these are insider, they already know, and that is why it is going up. So if this trend line breaks, don't be shocked, but long term it is bearish. And this complete bearish trend top to bottom has retraced 38, and next target will be 50% retracement, but that will be breakout, so it will not stop before 61% retracement level. But right now all the technical traders are selling this trend line. And if we see next chart, Dow Jones Industrial Average daily time frame, it is going up. So somebody said in last video about 78% retracement level So technically this is last retracement level. Beyond this level market will turn bullish. So there is a possibility it can make double top. But again they are bearish because next year 2023 first 6 months, which we call H1, the first quarter and second quarter, big player professional money manager will not buy stocks because that is stagflation. There will be no growth in global economy and stocks only go up when there is a growth. And you saw market was crashing because there was lockdown. Lockdown mean no growth, that is why it crashed in almost vertical line. So in first 6 months of next year there will be no growth in global economy and final trigger will be rate cut, and market can make top before rate cut or after rate cut, but be prepared on each rate cut cycle market crash. And once this drop start, bottom will only come after Fed starting QE monetary policy, like this happened in March 2020. So QE will start in the end, but in second half of next year, in fourth quarter, people are expecting they will start rate cut in Q4, because by the time we reach March 2023 we will have more information, and once panic start, rate cut can be start in third quarter, but right now possibility is fourth quarter. And if we see NASDAQ daily time frame, then it is more bearish compared to SP500 and Dow Jones. It is clear bearish trend technically, lower low with lower high, and last wave one by one testing. First it tested 38% retracement level and last week tested 50% retracement level. So next resistance for intraday trader who trade on H1 or H4 time frame, the target will be 61% retracement level. But main trigger will come from SP500, because once that trend line breaks, and if SP500 drops from that trend line, then NASDAQ will come down with SP500. So here maybe you not have clear signal, but next lower low target is 8000 level, and it will happen next year 2023. So that is price level. And on time scale, right now it is not possible to accurately tell you that when will be rate cut, but right now possibility is Q4 2023. And from rate cut to Fed QE monetary policy, there will be extreme bearish trend. In that condition it will hit 8000 level.